Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes only. They are not tax or financial advice. Bitcoin Borrow Die is powered by Bitstack. Visit us at trybitstack.com today and build your wealth in Bitcoin terms. So for today's video, we're going to talk about credit ratings, what they are, Ledn's new bond product and their credit rating, and then also Strategy's credit rating. So what are credit ratings? They're basically a debt report. They're basically a debt report card. So independent auditors like S&P Global, Moody's, and Fitch assess the risk of default and basically the credit worthiness of the company and then give them a rating, a score, which we'll get into in a moment. And they kind of go from a letter grade of AAA down to D, which is default. And these grades are just to give people a quick overview of the credit worthiness of the company or operation. So they're kind of like an institutional gatekeeper where anything above a BBB minus is considered investment grade. And then things below that are more like high yield or junk. And this really matters in terms of companies having a rating because that's a big requirement for a lot of bond investors where they just simply can't purchase or invest in a company or asset that doesn't have a rating. And then there's another tranche that have to have BBB or above to be able to invest. So it's kind of like your grade on this report card matters a lot if institutional money can even consider you for investment. So again, like anything above BBB minus is investment grade. Junk status is BB plus below. And then ratings unlock steady yields for buyers and cheaper funding for issuers. So the better the rating someone has, the cheaper capital requirements are. And this really matters in general, but especially for Bitcoin, as now we've got two different products that have credit ratings. The global bond market is enormous, over $130 trillion. The USA bond market is around 50 trillion. And a lot of this capital needs a rating to even be able to consider investing. So as we see more Bitcoin-ish companies get a rating, and as the ratings improve, we can see more capital, or at least it being available to more capital coming in. So kind of breaking down Ledn versus Strategy here, there's a few different comparisons we'll walk through. So they have a shared focus, just a differentiated risk. So that this credit rating shows an asset maturation where S&P acknowledges Bitcoin's viability in finance, factoring in liquidity and growth potential. There's value generation where both firms treat Bitcoin as the core value driver, signaling its transition to credit worthiness asset. And then Wall Street entry, where a shared focus on institutional rails moves Bitcoin closer to primary reserve status. So this is just ways that Bitcoin is being recognized and perceived as valuable collateral. And kind of looking at them on a head-to-head comparison, we have Ledn on the left, Strategy on the right, where Ledn pooled their loans into a bond product, and the interest on the loans is what's paying the yield on the bond, and it's overly collateralized by Bitcoin, which is why their rating was higher than Strategy's, which is pretty much is like a corporate issuer. One of the key strengths for Ledn, again, is this over collateralization, and for Strategy, it's access to the capital market and their enormous Bitcoin holdings. Volatility is a risk for both of them. Negative cash flow and concentration for Strategy. And this kind of head-to-head comparison just gives us a little bit of a value or an overview of how they compare. So Ledn is investment grade and Strategy would be considered junk status. Although strategies, their rating is going to improve over time, and this is why you see them like create their cash reserve buffer just to be able to pay out their dividends for like 2.5 years. It's a way to kind of just get the market more comfortable with what they're doing and to kind of squash a lot of FUD and things like that. So Ledn's bond is a really interesting product. We kind of touched on it already. Their issuer trust 2026 one is $188 million bond product that's backed by Bitcoin loans, and it's the first to get this investment grade rating. They haven't released the yields on it yet, but people are expecting it to pay between like 6 and 8%, and it's backed by the interest from the real world borrowers, and then Bitcoin is used as a collateral. And I think all of Ledn's loans have been successful so far, where if people get margin called or in the liquidation phase, they can easily sell some of the Bitcoin to bring the loan back into line for their LTV. And this is really such a big benefit of Bitcoin as pristine collateral, where the market is open 24/7, 365. It's enormously deep and super liquid, where people can actually sell a material amount of Bitcoin to bring these loans back into in line with their LTV. So it just is really great collateral, and we're seeing this more and more as we're getting better ratings. And Ledn is really kind of focused on safety by design. They've had zero principal loss since 2018, which is a huge deal. Again, all their loans are overly collateralized by Bitcoin. If any of the loans hit a margin call or a liquidation, they can always sell Bitcoin to facilitate the loan, which is a huge deal. Risk buffers, again, a lot of it is they're 50% LTV or less, so it's overly collateralized. So if the loans get into a bad spot, there's plenty of Bitcoin behind them that can be liquidated. Institutional trust is coming along. Again, with this BBB rating, it validates the management of Bitcoin volatility, and it's treating it as institutional grade debt and credit worthiness. And this introduces just another flywheel effect for Bitcoin, where as Ledn sells this bond to the market, the proceeds that come in can be used to facilitate and issue more Bitcoin loans, which again offers more bond that can be sold. And all of these Bitcoin loans, this Bitcoin borrow die strategy, people are locking up their Bitcoin as collateral. They still own the Bitcoin. They're not selling it. So this just takes more and more Bitcoin off of the market. And then you have fewer sellers at a certain price. So the price has to move up to meet the demand. So this is just kind of a summary of Ledn's new product, their new bond, their new rating, comparing them to strategy. And it's really exciting to see Bitcoin companies in the Bitcoin universe start to get not just a rating, but institutional rating, and we'll see them improve over time. And again, this just helps. It's cheaper capital for the companies. They can use it to grow their business. They can use it to continue to build out the Bitcoin ecosystem. If you have any questions about this video, put them in the comments. Like this video, hit me up if you need anything, and I'll see you next week.